Welcome to my podcast. I'm Reagan Bashara, founder of Ollie's Accounting, a bookkeeping and payroll services firm based in the United States. I have almost a decade of small business accounting expertise to share with my clients and the business community at large. I want to help you define your beliefs and values, create better procedures in line with those values, and realize your financial agency and independence as a small business owner. Whether you've got a side hustle or a fully fledged business with a team of employees, we all share the same struggles against our limiting beliefs. Let's overcome those together by imagining new ways of doing business. I am coming on to talk to you today about how to start your business, what you need to consider whenever you've decided you want to start a business. But I wanted to give you an update because I know a couple weeks ago on my recording about when things are scary as a business owner and how to deal with your fear and anxiety while running your business. I talked about my cat who was hiding under the house because he was scared, and he's like practically feral when he sets outside. And so I just want you to know that I did set that live trap and I was successful in catching him and bringing him inside. So if you are worried about it and you don't follow me on Instagram, just know that he's back and he's safe. But also make sure that you go follow me on Instagram. And maybe the next time a cat gets out, I'll update you there and you won't have to wait a couple of weeks for me to update that in the podcast world. And then really quickly, I just want to say that I want to thank you if you have been listening to the podcast this whole time. It means a lot to me. And if you've also been sharing it, and if you are on Apple Podcasts where you listen, or I believe Google Podcast does this as well, if you've left a review, thank you so much. Like, it means a lot to me to get feedback and to hear back from the listeners about what they think. And you can always, give me that feedback. I'm always open to what you guys want to talk about, really. And I started this podcast last year, a couple of months after I started my business. And doing a podcast was something that I've wanted to do for like a long time. I've listened to podcasts for a long time, so it's always been a format that I enjoy, kind of like while I'm working or doing chores or playing games on my phone or whatever. I enjoy podcasts because I like to hear how other people think about the world. And especially when it comes to running a business, I've followed a lot of people that help coach other people on businesses, do bookkeeping, do accounting, do business consulting. And it's really valuable to me to hear how other people think about business in the United States. It's helpful to hear different perspectives on deciding when to hire employees and what kind of business structure you should have. And I always wanted to find a way to add my voice to the conversation. And so I had to get a lot of the fear and anxiety of being visible and being out there and saying things and knowing that somebody might disagree with me or saying something that people get upset by, which I'm I don't even know what I could have said at this point that would have upset somebody, but whatever. That's always a possibility, of course, that somebody is going to have a different opinion from you, and whether or not they share that didn't matter. I was just even imagining somebody disagreeing with me was something that I couldn't handle. And so I had to do a lot of work to be okay with the fact that other people have different opinions than I do, which is obviously the case. That's just the world we live in, and that's fine. So I just want to thank you if you've been listening this whole time. If you're a new listener, but you're deciding to stay on, it means so much to me. And if you have been listening or you intend to continue listening and you haven't already reviewed, I want to invite you to do that because it does help me push my content to more people. And that's the whole purpose of me doing this, is to have a conversation, to impart some expertise and experience to you for free in a format that hopefully you'll find useful. So if you could help me, with my over-delivery intention for 2023 and share this podcast on your social media, leave us a review on Apple Podcasts, Google Podcasts. I don't think Spotify has a way for you to review. And also, I have an option for people to set up a monthly subscription through Anchor FM. So Anchor FM is the platform that I use to share my podcast, and they have a subscription option. The podcast will always be free. I don't want anybody to not have access to this information that I'm choosing to divulge. So it's going to be free. And if you would like to support me, you can do that through a small subscription through anchor.fm. So the link to do that will be in the show notes. And you can also go to anchor.fm/Reagan-Beshara. And you'll definitely want to check the show notes to make sure that you're spelling my name correctly. All right, we're going to get on with the podcast episode now. And I've titled this How to Start a Business. But this is not going to be like a step-by-step process, because that information is already available and out there. In fact, I have it available to the people that are on my email list. I have a checklist for a business setup that you can receive if you get subscribed to my email list. So if you want to get subscribed, you're going to go to alleaseaccounting.com/subscribe. And after you've subscribed, I'm going to be sending you information. I'm going to be sending you tips. I'm going to be sending you updates about my business and the things that I'm offering. And you can get on a consult with me if you get subscribed as well. So go get subscribed, and I will send you a free business setup checklist that takes you through literally all the things that you need to do to set up your business in a general sense. There are going to be states and cities where there are additional steps that you have to do, and I have not narrowed that down for every city in the United States, but I am taking you through the basic steps of like setting up your EIN, setting up your LLC within your state, getting accounting and bookkeeping software set up, because yes, you do need to do that from the beginning. That's exactly what we talk about here on the podcast. And today I'm going to talk to you mainly about the things that you need to consider when you're like, I think I want to start a business. And you're like, well, how do I even go about doing that? I'm going to go through the things with you that you need to ask yourself and that you need to consider whenever you're deciding to start a business. So this is not a checklist. That will come via email once you get subscribed, but I'm going to talk you through the things that need to be thought about. A lot of this information is also available on my social media. So I have mini classes on or via Facebook Live. They're not on doing Facebook Lives. It's me going live on Facebook to talk about small business topics. And that's every Wednesday at 11 a.m. Central Standard Time. So if you're following me on Facebook, you will see those events. You will be able to come on live and ask me questions. For the time being, that is what I'm doing. So let's go ahead and get started. These are the 3 things that you need to consider when you want to start a business. And number 1 is going to be the scope of the work that you're doing. Most businesses fall into one of 2 categories or a combination of these 2 things. Either you're going to be a service-based business or you're going to sell a product. Now, there's a lot of categories within each of those things, but that's like how I look at most businesses and their revenue streams is, are they providing a service or are they selling a product? And so you'll want to ask yourself, am I going to be doing a service for somebody else, or am I going to be selling a product, or am I going to be doing a combination of those things? If you're doing a service, you could be someone like me. So I provide bookkeeping and accounting services to my clients. That's me like doing work for them, and then they pay me for the work that gets done, right? Versus someone who has a product to sell. And that could be a tangible product. That could be access to something. That could be a digital product that they download, software or an ebook or, some other product that they're exchanging money and they get like a tangible thing in return. And you're not necessarily charging them for the work that you had to do to create that product. They're just buying either the product itself and they're going to own that, or they're buying access to something. What do you want to do? Do you want to do either one of those service or product-based business? And you need to define that for yourself. You need to define the scope of that work. And then you could also do a combination of those 2 things, right? The second thing that you need to decide on your business is your business structure. And I've talked about this in a recent Facebook Live, which is why I brought that up at the beginning. I went over all of the different types of small business structures that you can have in a recent Facebook Live. So if you go to my Facebook page, Ollie's Accounting, or facebook.com/accounting with ease, and you click on the videos tab, you will see all of my Facebook live classes. And one of them is different business structures and how they affect your personal taxes. You can have LLCs, which can be a single member LLC or multi-member. You've got partnerships, you've got S corporations, and then you have corporations. So when you start a business, you need to decide what business structure you're going to have. And that's going to be based on a couple things. It's going to be based on who all is going to be an owner or a member or a manager of the business and what kind of equity they're going to have in the business. What is their share going to be of the business equity? And then you'll need to decide how you want to get paid in your business. So that's going to be number 3. Normally, when people start a business, they're not really bringing in the type of revenue that they need to pay themselves a salary. And so being able to pay yourself a salary is one of the measurements that we use to determine when it's the right time for you to be taxed as an S corporation. But if you're just a sole proprietorship, we've talked about paying yourself in the form of taking owner's draws. So you'll want to see who all is going to be a member of the business entity and how they're going to get paid. If you have multiple people and they're not all going to be actively participating in the business and playing an active role in the day-to-day business activity, they're probably going to be set up as maybe partners that receive distributions. They don't need to be paid a salary because they're not working in the business. Or maybe in that case, you would set up an S corporation, multi-member LLC that is taxed as an S corporation, and then those owners would receive their shareholder distributions based on maybe a percentage of the company's profit or loss. But for most people starting a business, you're only going to be starting out as a sole proprietorship if it's just you. And what you're going to do is file for an EIN number, which is an employer identification number with the IRS. So this is an identification with the IRS to identify your business entity. And from there, you can declare with the IRS that you're going to be a single member LLC. When you're a single member LLC, you're a sole proprietor, but you can set up an LLC with your particular Secretary of State where the business is going to be. But you're not actually going to be a separate entity for taxing purposes. A single member LLC can choose to be considered a disregarded entity, which just means that that business does not have to file its own tax return. If you have a business set up that is a partnership or an S corporation or a corporation, the business actually has to file its own tax return first. So before you, the owner, get the paperwork that denotes what your share of the business profit or loss is, when you're a disregarded entity, the business is still separate from you. You can still set up an LLC to have, your assets in the business separate from your personal assets, but the business income and expenses and therefore profit or loss gets reported on your personal tax return on a Schedule C. So it is a disregarded entity, but it's separate, but it doesn't report its own taxes. It's passed through to you, the individual, the sole proprietor and the owner. Because if you're rocking on with the business and you've also got other income, and your spouse has income, or maybe you've got other things going on, all of that's going to play into your individual taxes, and nobody wants to be surprised by a big tax bill at the end of the year. If you end up owing more than $1,000 in federal taxes, you could be penalized for not making enough payments towards your taxes during the year. So you could be penalized for not making estimated payments. So $1,000 is kind of the baseline that they use to determine whether or not you need to make estimated payments related to your business income. So if you're not a single member LLC or a sole proprietor and you're a partner in an organization or you're a shareholder and there's other people in the organization that receive a share of the business equity or the business profit or loss, you need to understand how all of that is going to affect your personal taxes. So it's always coming back to you, right? That's why it's important to sit down with an advisor and discuss the different scenarios that are available to you to set up your business. See what's going to work best for you to manage and how it impacts your taxes. And then the third thing that we need to consider when we're starting a business is how you're going to get paid by your customers and clients. And I have a little bit of a rant about this because I see a lot of business owners setting up all these different ways that people can pay them. So they erroneously think that having no barrier for customers and clients to pay them is the way that they're going to make more money. But here's the error with that thought. Let's say you've set up 10 different ways for people to pay you. So you've got Venmo, PayPal, Zelle, Cash App, QuickBooks payments, Stripe. You've set up all these different ways, and that's not even all of the ways that people can process payments for you, right? There are more. So you can have ways to pay that people can do a payment plan. There's that payment plan thing called like Klarna or something, or there's other ones out there where basically your client gets to pay on a payment plan, but you receive the full payment up front. And so people want to remove all of the barriers to clients paying them. They don't want to hear a client say, I'm not paying you unless I can pay you like via Cash App, or I can't afford that price right now. Do you offer a payment plan? They don't want to hear that and then tell the client no, and then that mean that they can't work with the client because they're desperate to get paid. So people want to remove all of the barriers to clients paying them. They want to remove all the objections that clients and customers have. And then the other thing that they do is that they don't take into consideration what the fees are for different payment processors. So some people using Venmo, Cash App, all of that are like, oh, I don't have to pay any fees. The problem with that is that regulations are being passed now to force these apps and these payment companies like Venmo, Cash App, PayPal to report when people are paying each other money and sending out 1099s to the recipients of that money. So, we've got these lawmakers trying to make these regulations to try to capture businesses that are paying each other like this and paying money under the table. And so it might be free to pay somebody that way or to transfer money to somebody else, but that does have to get reported, and customers can dispute those transactions. And if you're using a payment processor that accepts credit card payments from your customers, usually there's going to be a small percentage fee taken out of the payment. And so what business owners will do is they add in the payment processing fees to the invoice. So what you're essentially doing is you're raising your customers' or clients' prices for your services just so that you can avoid having to pay that fee. Let me tell you something. Payment processing fees are an expense to your business. You can claim them as a business deduction, but a lot of people don't even want to pay the fees, even though it's a small percentage. It's literally like 3% or less to process the payment, and that's the fee that you have to pay to process those customer payments. That's a really small margin, and considering that you've got whatever your payment is going to be, and then you only need to pay 3% of that to allow your customers to pay you with a credit card, but folks will turn around and add that fee back into their service price as an additional line item. I think this is bad business practice to do that. If you're charging people the fees that you have to pay in order for people to pay you a certain way, I don't think that's a good business practice. You're a business owner. There are expenses related to doing the work that you do or to make the products that you buy and resell, etc. You're not passing on every cost of you doing business onto your client. You're passing on direct costs, like if you have a product that you resell and that you mark up, and so it's a separate item on like the invoice versus like your service fees, you're passing on that direct cost and you mark it up, and like that's not what I'm talking about here. That's a very common business practice, and I don't have a problem with it. But we're not talking about that. Direct related cost to the product or service that you're providing is not the payment processing fees, right? We're talking about just to be in business and to accept credit card payments, you do have to pay fees. And what you're doing is turning around and imposing that cost on the client, whereas you get to take the fee as an expense and a deduction against your business income either way. So if you really want to take into consideration the fact that you have to pay processing fees for certain ways for clients to pay you, then just raise your price to account for that instead of having it as like a separate line item. It just drives me up the wall. I don't really understand why it bothers me, but I know a lot of people don't like to see that. Oh, you're charging me a credit card processing fee? Like, this is for my convenience and for your convenience. And as the business owner, you get to take that as a business deduction and an expense. I don't do this for my clients. If you're a professional service provider, especially like what I do, bookkeeping, I don't think you should be doing that. Raise your price. Have the processing fees be considered as part of your pricing, but not as a separate line item. Anyways, going back to all of the different ways that people can pay you in your business, if you have 10 different ways for your clients or customers to pay you, what you end up doing is spreading yourself thin in order to please somebody else. Maybe a client does want to pay a certain way, but do you do everything in your business just to make it easier on the customer or the client? Do you want to do things in your business that expand your capacity to grow and that make your life easier and your day-to-day job easier? Who are you trying to please? Who are you trying to make it easier for? And of course, if you're providing a service to your client or you're selling them a product, the result of them paying you may include some part of their life being easier in some way. But giving them 1,000 different payment options just so that you've covered everybody else's possible desires for method of payment is not making anybody's life easier, including your clients. If you have 1,000 different ways, and I know 1,000 is a big number and I'm exaggerating. If you have 1,000 different ways for somebody to pay you, that's 1,000 different reports that you need to pull every month to reconcile payments that were made to your business. I used to think that the more places I had to look for a client in order to get their revenue reports, the more that I should be charging them. And I don't really operate that way anymore. I work on a flat fee based system for my bookkeeping services. So it doesn't really matter how many different places I need to look, it's all included in one price. If somebody has 5 different payment accounts or methods or payment processors set up for all of their different clients' wants and needs, I'm gonna tell them why are we doing this? Whose life are we trying to make easier when you're making this decision to have 5 different ways for people to pay you? You're not making my life easier as your accountant, certainly. I'm still going to do it because that is part of my services, but you're not making your life as the business owner easier either. You had to go in and set up all of those payments. You have to administer all of those different payment methods. And if I have to look in 5 different places and pull 1 million different reports, once again, I know I'm exaggerating and being hyperbolic, but I'm going to do it. But it's a much better business practice to be streamlining those kinds of things in our business, because at the end of the day, are you really saving yourself time and effort to try to make it easier for somebody to pay you, but you're doing that times 30, 50, 100 people. And you're spreading yourself out in that way and having all of these different ways that somebody can pay you instead of having maybe 1 or 2 ways for people to pay you. For instance, with my business, I prefer that people make electronic payments for their services. All of my people are either on AutoPay or they have an ACH agreement with me where I can process their payment for their invoice every month. And then of course, people can send me checks. I don't accept cash because I don't have a public office space. I work from home and I'm not going to have people coming to my house bringing me cash. So they could mail me a check if they wanted to, but most of them recognize that the convenience works for both of us whenever they can pay me electronically. And I've taken into consideration the fact that my services need to include the price of the cost of doing business, and that includes payment processing fees. So you can narrow down the ways that people pay you as much as you want, and it's perfectly okay to say to somebody, if you have a service or a program that you're selling, this is one price. It's not a monthly subscription. And it's okay to say, yes, I'll offer a payment plan, but it's going to be in 3 payments. You cannot spread it out over 12 months. It's perfectly okay to say, no, I don't offer a payment plan. You have to pay in full for access to the thing. So it's okay to set these boundaries about your business because you're in business to work and make money for yourself. We need to consider what your needs are, how you work best, and how you want to get paid. And it is okay to turn people away. It does not mean you're running your business into the ground just because you haven't set up 7 different payment services. It's okay to turn people away who are not willing or able to pay the method that you want to be paid and the amount and frequency. All of those things are things that you get to decide. And it's okay to decide that you want to offer a payment plan for things. You offer what you want to offer as far as client discounts, as far as payment plans, etc. All of those things are okay, but we need to consider, are we doing that so we can make our services more accessible to a larger group of people because we don't want to exclude people that may have some sort of situation going on that they need our help and we want to help them? It's okay to decide that you want to show up and serve those folks too. But on the other side, are we just spreading ourselves thin so that nobody will have any way to say no to our offer? What we've done is spread ourselves thin and we have to look in 10 different places every month to get our revenue reports together. And what is the purpose of you choosing the method and frequency and type of payment that you want to have for your services or your products? Are you just trying to please a bunch of people and leaving yourself hanging out to dry in the process? Or are you setting good boundaries and saying, my services and my product are valuable and here's the ways that you can pay me? It's okay to not negotiate how everybody wants to pay you. And another thing, going back to the Cash App, Venmo, PayPal people, it's unprofessional to use Venmo and Cash App for your business. It is unprofessional to use PayPal if you're service-based, because people can come back and dispute the charges that they've paid you via PayPal. PayPal is notorious for leaving business owners hanging out to dry. When people dispute their charges through PayPal, chances are your business is the one that gets left behind. So have a good payment processor for your business so that you can easily collect payments from your customers so that you can make money. That is why you're in business. Do yourself a favor and don't do yourself a disservice by trying to please a bunch of people who are using Venmo and Cash App and are not taking you seriously. You need to be the first person to take your business seriously, and that means having boundaries about how people can pay you. So those are the 3 general things to consider whenever you want to start a business. And I told you I was going to go on a rant about the payment stuff, and I did. So you want to decide on the scope of the work or service that you're providing. You want to decide what kind of products you're going to offer for sale or what services you're going to offer to people, or are you going to do a combination of those 2 things? That's just how I think businesses are categorized in general. And you want to determine what your business entity is going to be, how that's going to affect your personal taxes. And then you need to figure out how you want to get paid and when. And through what payment processor? What are you willing to accept? And set those boundaries so that you don't overstep and cause your own business stress and anxiety, etc. We don't want to spread ourselves thin and burn out immediately. So setting good boundaries is the way to avoid that. That is all I have for you today. Thank you so much for listening. And if you have topics and things that you want to learn about, either on the podcast or on my Facebook Live classes, come leave me a comment on social media. I want to hear back from you. I want that feedback. I think I have a good idea of what most business owners struggle with because I've worked with people like you over the last almost decade, and I'm a business owner myself and I'm in it too. We're all in the struggle together, but we're going to figure it out together. You're a part of my community just by being here, just by listening. And so I want to include your feedback and your desires on what you need help with. So come leave me a comment on social media or respond to one of my emails. And if you're not on my email list, get on there. alleaseaccounting.com/subscribe. Have a great weekend, everybody. I'll talk to you later. If you are enjoying what you're learning on this podcast, please consider supporting me through a subscription on Anchor.fm. Any donation amount is welcome, or you can simply share it with someone you know. You can also follow me on Instagram at alleaseaccounting and sign up for my email list at alleaseaccounting.com/subscribe. Thanks for listening.